What's up, legends? Just going to be walking through the GU buy that I took on Thursday, the 12th of Feb. This trade was really just based on like a high time frame context of what the market was potentially doing and where it could have gone. I had both sides, bullish and bearish, on different time frames working with it. Didn't really have a whole lot necessarily working against it from a high time frame. So I was sitting in a really, really good position for this setup. So what we had starting on the hourly time frame, looking at a 4 hour range, which is this low to this high, you've got a decisional here, and obviously our extreme area down here. This area, good inducement point, created our 15-minute bearish internal leg. 15-minute externally bearish 15-minute leg. Got that full retracement back up to the high just here. Now, from a higher time frame perspective, the market can go bullish from here as it's the decisional of a 4 hour break. So we've completed or could be completing that structure cycle, coming to take out the high, which means this point here could be a smart money trap. And obviously everything inside of here will be a smart money trap if that is going to be a smart money trap. So you've got that aspect behind it. However, jumping on a higher time frame again, we've taken a weekly high, a daily high. This obviously is starting the complex pullback of that leg. So if this point here is going to go against the new structure cycle, getting a complete retracement down to more so this area, which you could see as the decision, or even this low here as the decision of that break and that break, then this point will be a smart money trap. And if that point's going to be a smart money trap, it'll need to induce something of significance, which would be this high, to then bring in all the buyers down here to then sell through. So of course, if it's going to get there, it needs to push through all of this, which allows us to be buying from where we are and buying off of the back of this. So we've got lots of different reasons to be able to look for buyers in this area here on higher time frames. And then if I drop down to the 15-minute, we look at our range. We've got extreme, mitigation, one break, retest, two breaks. But as we know, that's an internal range. At this point here, it's just retest. Now, if that higher time frame context is going to play out, this point here will be a smart money trap. If that point's going to be a smart money trap, we've now brought in sellers with these two breaks to the downside. We know people are selling out of here because it's retest. And smart money traders are just viewing that as a new high. So they're going to be looking to sell out of here. So we can target all of them and target the potential sellers from this area here as well, if it's going to be a smart money trap. So you've got those contexts for buyers. We've got this area here, which is a supply to demand area that's swept liquidity. We've got inducement into it from people buying out of here, not understanding that bearish structure cycle. So we've taken out all of those buyers, brought in sellers, and we know that if the market is going to go bearish and it's going to follow that structure cycle, where does it need to sell from? It'll need to sell from the sweep of this at the very minimum. Can come up here, can come into that decisional, can of course come to that extreme area and fill the imbalance up there. But at the very least, it needs to sell from here if the structure cycle is going to play out correctly. So even if it is going to go bearish, it makes sense to come to here. We can buy it up to there. So we've got so much in the way of our context to be able to look for buys up to this area. So we've got our daily, 4 hour, and 15-minute external in all directions making sense as to buy. So from here, when you're in this sort of positioning, it's really just find a way to get into the trade because we want to make sure that we're getting in and a part of this move. You can take it one step further and you can look at the trend line that's been obviously come across there as well. So we've got lots and lots of liquidity targets and lots of structural reasons for the setup. The next thing we have here as well is the low outside of Asia low. So we're in a good spot there as well, treating that as a medium inducement, as well as, of course, that's medium inducement there. So sitting in a really, really good position, dropping down to the 5-minute. We can also see as well, actually, if I stay on the 15-minute for a second, you can see how clear of an inducement this is. with that really fast wick down and pull straight back up. Very, very, very clear inducement, very strong sign that we know is a potential inducement rather than it being a break of structure. So that's always a good sign to see. You can see it's even visible on the 5 minute, straight down, straight back up. So what we then have from here, looking at the actual setup itself, you've got that inducement, and then we've got this high here. Now, this supply area, yes, it led to the break of this point. However, we know that it's highly an inducement rather than a break of structure. So if we think that was our last inducement point, where's our next inducement point? It's the sweep of that high there. So that's going to be our break even target. That's where we are going to be holding till before we move in anything to break even. And we know we should, at the very least, based on this inducement, we should be able to get to there. So we're in a very, very risk-free trade. We're in a great position here. The other side of this as well is if this range here is going to hold, it would have needed retest. We can see there's our break externally. We don't have any retest. The other side of this as well, the other component to be able to have a legitimate range is we need liquidity. In this pullback here, if I just actually pull this back before the mitigation, in that leg, there is no liquidity generated. Even if I drop down to the 1 minute, I will just drop down to 1 minute for a little bit. There's no liquidity generated inside of that leg. So there's nothing confirming this as a valid internal leg. This little range has been retested here, but it's very, very insignificant. There's no liquidity generated here. So if there's no liquidity generated, it needs to generate liquidity. When you can't see liquidity, you're generally going to be the liquidity. So in a situation like this, for anyone selling from here, you can't see any liquidity. The market now needs to generate liquidity to be able to bring in the sellers and continue with its pure intention, its true intention, which is to buy through this area. So that's why we're going to be looking to treat this as a smart money trap. Goes against every single context on the 5 minute, 15 minute, and the higher time frames, like I explained. So we really just want to follow along with that context. And now what we need to see is the market induce some sellers so we can look to take out those sellers, and then we're able to get into our position. A couple of different ways you can go about this. For this trade, I was partialing it at 1 to 3 and then planning on holding it to that high, but I will walk through shortly what I ended up doing with this trade, a little mistake that I actually made that cost me an extra percent, and how I should have gone about managing it. So for the premium guys, I'll drop down to the 1 minute here now, and we'll go through the actual entry. Jumping back out to the 5 minute here. So at this point, like I was explaining, we are at break even. We've got this little internal breaker structure here, and this is actually what started the movement for my mistake, unfortunately. All right. So if we have a bit of a look at what we've got here. So we've got our internal break, and then we've got retest. What's happened, which is great, is we've confirmed this whole area here through this inducement as a smart money trap. So I've got an inducement low out of a smart money trap area. This point here is the decisional of that break, and this is, of course, our extreme area. So I've now gone cool, we've confirmed a decisional, we've created a supply to demand area, which induced, awesome. I've hit my 1 to 3, I've taken 50% out of my trade. I'm going to hold to like 1 to 7 to the high, and I'm going to move my stop loss up to here, which is about a 1 to 1. Pretty sure it was like exactly 1 to 1. Yeah, pretty close. So I moved my stop loss to there. As I saw, inducement point, we've now swept an external 5 minute range and the decisional of that break. But I still knew, of course, that this whole range here really shouldn't hold because of the context. But given that I had partialed out of it, I wanted to make sure that I had my stop loss at 1 to 1, as I didn't see it as valid as coming past here. I did know that this was retest of that break, which is the issue, is I moved my stop loss to retest, which can be induced. And what I ended up doing, or what my thought process was if it comes here, it's going to come here, which is where my commissions were. I had my stop loss covered, obviously, commissions. So I'm going to get taken out anyway. So I may as well secure an extra 0.5R because I've only got 50% left in it. rather than just getting the pure break even for the rest and losing out on that 5R. Now, that's my error. That was FOMO. And I shouldn't have allowed that to come in and affect how I managed the setup itself. Um, so yeah, that is an error on my behalf for this trade. Now, what I'm going to do is I'm going to put a line here at 10:30 because that's where I go to bed. So this line here is where I should have closed the trade, no matter where it was. We had news coming out at 11:30, so that's an hour before news, and that's when I'm hopping off the charts. I can't hold through news, and I'm hopping off the charts and I'm getting into bed, ready to go to sleep. So I can't continue to watch the trade. So no matter where the trade was, I should have closed it break even. I should have just closed where it was, regardless if I hadn't been taken out already, and just accepted the outcome of whatever that was, knowing that it's more than likely at this point not going to get to there. If it hasn't gotten here by here, that's a long time, that's like 5 hours. It's more than likely not going to get there within another, hour. It's just really, really unlikely. So that's where I should have, gone a little bit more, yeah, just had better, just being a bit more neutral with my analysis, unless hopeful that yeah, it's just going to run to my 1 to 7 and fly up there. That was FOMO. What I did with this was FOMO of missing out an extra 0.5 up. I moved my stop loss there, and it was FOMO of going on 1 to 3 or whatever, and missing out on an extra zero point 0.4, an extra 4R from it running through this trade, which is an extra 2R total. So that's my error. I should have just left it at break even, or when it got to my time to close it, just close the trade of where it was at. Allow the market to induce because it doesn't have to come all the way down here, but if it is, just accept that outcome, but know that it can induce this retest without coming all the way down and push. So I should have just left it open and not moved my stop loss to a liquidity point out of FOMO. So if we look, we came all the way down very deep into it. And at this point, I was like, yeah, I'm on. We're sweet. I'm not going to get taken out. It's going to come up and get to that high. So if we just forward this along, we can see the market. It's just cruising, 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 cruising. I was actually watching it when it was like here and going, oh yeah, like mad, pretty well like half an hour before I'm going to bed. At this point, I was getting ready to go to bed. I should have just closed it. I should have just closed the trade, or I should have moved my stop loss to like 1 to 3, and whatever happened. 1 to 3 is there. I was watching it when it's here. I remember seeing it break this high and going beautiful. There was obviously like there's something up inside of here that I was looking at. Yeah, it was in like this area. So I was like, cool, mad. Let's confirm that area is a smart money trap. It should push through this high. Sweet, we're on. I should have just moved my stop loss to 1 to 3 and just accepted it. And I was tempted to do that. I just decided not to for whatever reason. But yeah, so then if I get rid of this line here, that's my 10:30 marker. Oops, one over. That's my 10:30 marker. I'm just above 1 to 3. At this point, I'm done. I'm hopping off. I should have just left it be and closed it. But instead, I decided to leave it open and stay up past when I should have been staying up to try and hold it for a little bit longer. Again, FOMO. What ends up happening within what is that? Within 20 minutes, I'm out. I'm taking out of the trade. So I finished on 2R, could have finished on 3R by not having FOMO, and just accepted it because that would have been the correct read. And funnily enough, my FOMO actually caused me to miss more. So I ended up missing more. I ended up missing out because of my fear of missing out. Stupid. Absolutely stupid. Quite unfortunate as the trade does end up running and the analysis played out perfectly, which I'll continue to show in a moment. That's the news. Just see it. News didn't end up doing anything, but we can't hold through red folder news, especially when we're not on the charts, because of obviously TP rules and things like that with funded accounts. So yeah, nothing we can do about it. My mistake ends up playing out perfectly in terms of sweeping that retest and selling off from there. But yeah, in terms of the actual trade itself, beautiful, beautiful, beautiful. It is literally the only thing that you don't have for this trade is timing as we're trading Frankfurt Open. But besides that, the trade is as A plus as they get. They don't get any cleaner. They don't really get any better. It's a simple read, but you got to be very just understanding of your positioning in your ranges and the intention of ranges and the structure cycle and how it moves. That's the only way to catch this trade is to understand how this range is going to work, what this point can do, and what this point can cause this point to do, and obviously what these can do, and then what this point can do. It's so important. Um, yeah it's the only way you catch these sorts of trades is by understanding all those different contexts behind it. So hopefully this makes sense. For everyone watching on YouTube, chuck some comments down if you do have any questions. Guys in the Discord, if you've got any questions about the entry or anything like that, let us know. But hopefully this one makes sense. And yeah, you've all learned something from it.